Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, September the 6th. Quiet trade here overnight. Prices starting to firm up a little bit. Not a whole lot of fresh news so far today. That will change with the weekly export sales report and also the U.S. employment data that comes out at 7:30 Central Standard Time. The nation's economy is expected to have added about 160,000 jobs in August, up from 114,000 in July. The unemployment rate is expected to tick down a touch to 4.2%. Today's data will go a long way at forging the FOMC's decision here at their meeting next month, whether they cut interest rates 25 or 50 basis points. Right now, it looks like the equity market's on edge here, a little bit down about 0.5% ahead of these numbers. In grains, starting to firm up here, as I mentioned, steady to a penny better in the corn. Soybean prices are still a bit softer, down 4 to 5. Products also both just a bit lower, about $1 in the meal and 15 to 20 points in the oil. And wheat prices are mixed, ranging from down a penny to up about a penny or two here. Yesterday's EIA report showed ethanol production did slip to 1,061,000 barrels per day. It was in line with expectations, however, up 5% from a year ago. I look for the USDA to raise their usage for ethanol production 15 million bushels next week. Added 25 million bushels on the exports. I look for ending stocks down to 1.837 billion. That's 30 million bushels below the USDA forecast in August. I've got new crop production now at 15.120 billion bushels. That's down 27 million from the USDA estimate. In August, I have an average yield of 182.9. Still a record, however, just below the USDA forecast last month. And I've got U.S. ending stocks falling to 2 billion and 17 million. That's down 46 from the USDA last month. In beans, I got old crop ending stocks down 10 million due to higher exports. By production forecast 4.615 billion, up 26 million from last month. And I've got ending stocks at 580 million bushels. That's up 20. In wheat, the only change I see is a 20 million bushel increase to exports, dropping ending stocks to 808. Still a 4-year high. However, stronger demand is lowering the stocks forecast here a touch. No production update until the end of September. We've also have, with prices here at 4-year lows, U.S. farm income is expected to drop to $140 billion this year. Well, that's down 4.4% from last year. It's much better than the 26% drop that was initially forecast by the USDA back in February. U.S. weather just continues to look warm and dry for much of the Midwest, looking out for the next few weeks, pushing both corn and soybean crops towards maturity, while I think taking the top edge off of yields. This low water levels across the Midwest river systems have also caused barge rates to spike, adding further costs to U.S. farmers getting their crops to U.S. Gulf and into the global marketplace. Yesterday's drought index showed a 5% increase in corn areas in drought, up to 13%. Beans jumped 7% to 19%, while both at their highest levels in months are still well below the 49% and 43% levels, respectively, from a year ago. Winter wheat areas in drought did jump 5% to 52%. This as farmers in the southern plains begin to plant next year's crop. Dry conditions in west central Brazil for at least the next few weeks could potentially delay the start of planting soybeans down there. So very quiet trade here overnight. We'll see if corn can build on the 25-cent rally we've seen off the August lows. Recent recovery in Nov beans has so far been capped at about the 10.25 level. We also have the 50-day moving average just above that at 10.31. And yesterday, wheat ended a run of 6 consecutive higher closes. So far, the pullback has been limited. Have a great day, everyone.